My name is Jayne Robbins. Good morning, everyone. My name is Jayne Robbins, and I'm the principal here at The Informed Buyer, a buyer's agency based in Brisbane. Thank you for joining us for our Q2 2023 market update. It's been quite an interesting time in the market up here, and even when I was putting this data together yesterday, I was a little shocked with some of the findings around the listings and things. So I think the information I'm about to share will make people realise what's happening here in Brisbane is quite different to that in the national market. So I'm just going to jump into my presentation now. Okay. So today I would like to acknowledge my sources where I've pulled the raw data from. This is CoreLogic, SQM data, the RBA, and some of the migration stats. I'm going to go over some on-the-ground observations of how we have found the market here in Brisbane over the last few months. I will break down some of the data in terms of pricing values, but I do want to really dive into the listings, and we're going to speak a lot about that. We've heard a lot in the media about the supply levels, and I want to deep dive further into what we're seeing on a city level to understand Brisbane a little bit more. Then we'll jump into some units versus houses, even deep dive into the market further. And then, as always, I like to review my predictions from our last quarterly presentation, and then predict what I think will happen from what we're seeing. And then, of course, any Q&A at the end. So our on-ground observations here in Brisbane. So in the last quarter of 2022, so October, November, December, it's definitely been confirmed that this was our lowest and quietest period here in Brisbane. The buyer demand is now outstripping supply, so we are now seeing less stock coming onto the market, and at our open homes, they there's a number of buyers there, and I would say that the buyer interest has gone from just looking like we saw in Q1 of this year to now people actually putting forward offers, and quite often after the first open, we're seeing multiple offers. I would say in searching for our clients at the moment, we definitely see that circle 1 mil, anything under that is a very competitive part of the market. So we're seeing sort of 30 groups through the first open homes of, say, townhouses in that sort of 600 to a mil. And we're seeing multiple offers put forward and those properties selling quite quickly. We're not seeing prices escalate like we did in and around the COVID years, but we are still seeing it gradually creep up. What's driving this is the lack of listings, and that has a major impact here in Brisbane. So our data, I've kept the February data that we last reported on because I wanted to compare it back. So we saw on a quarterly level, we've seen that back in the end of Feb, we saw that Brisbane was down 3% in the quarter, Melbourne was down, and Sydney were down on a quarter. In the last quarter, that's really flipped, and now we've seen that Brisbane has gone into a positive price growth of 1.8%. Melbourne's gone positive too, and Sydney's even gone further up. So we've definitely moved through that negative growth, and we're now seeing a gradual increase. Interestingly enough, when we look at Brisbane, just at the end of May, we've got 1.4% growth in May alone, contributing to that 1.8%. So what we're seeing is the majority of that growth has come through in that quarter, has come through in the last month into Brisbane. Overall, nationally, it's flipped as well. So in the last quarter, At the end of Feb, we were down 2.3%, and now Australia national median has gone up 2.3%. So we're definitely seeing that. On an annual level, we've seen it's still negative, comparing it back to the last 12 months. And then even it's great to look at the monthly data, but that's really exactly what's happening now. So it doesn't give us that trend. So what's driving this growth? While we have an increase in interest rates going up, people are quite confused as to why the housing prices are still gradually creeping up. So we need to look further into the supply and listings data to see what's happening. So this is another great source from CoreLogic. It comes from their monthly housing chart pack. And we can see on a national level here in Australia, right across the markets, we're down 21% on last year. So that, when they break it down by city, even shows worse, that Brisbane is the most impacted or has the fewest listings at 32% down on last year. Now that sounds quite bad, but if we reflect on where we were at this time last year, and luckily I had that data from a previous presentation that I did last year. So this was the same housing pack from May 2022. We actually saw that we were down 20% last year. So it's a cumulative effect. And when we talk about reflecting it versus last year's data, we really need to take into consideration we're 30% down on last year, but last year we were 20% down on the prior year. So the supply issue here in Brisbane is something that has been gradually getting worse. And I think even when we look back on last year, again, Brisbane and Adelaide were the biggest impacted by the lack of supply. And when we look back now this year, Brisbane again is the most impacted because we have the fewer listings year on year. So that made me really want to dive into Brisbane data more. And so I was able to access the data from the SQM research. And this gives us nationally and historically going back to 2010, the trend in listings. So this data is great. It goes back a long time, but it also breaks down the days on market. So under 30 days, right through to the 180, which is down the bottom here. And you can see nationally, the trend has dropped off sort of in the 2021, and we have sat lower in total listing numbers nationally. So going further into this data, given that it's national, when we start to look at our other bigger markets, so your Sydney and Melbourne, I found some really interesting data about where they were at historically and where they're sitting sort of now. And what I found was Sydney, yes, it is lower, but it has had these lulls over the years and some higher number of listings here. But overall, yes, it is down, but not to the impact that we're sort of seeing on national trend level. So it hasn't reduced as much as the national trend. So Sydney's probably not driving that national trend. And when we jump down to Melbourne, and we know now Melbourne's median house price growth has only gone, or dwelling price is only at 1.4% from the start of COVID to now. So the Melbourne market has definitely been less impacted, or you would even say it hasn't gone anywhere near the growth that we've seen in some of the other capital cities. So when we look at the listings underpinning Melbourne, we can see that actually Melbourne has jumped around. It had a higher listing sort of back in that 2011 to 2015 period, but really since then it sort of jumped around and doesn't seem to be at too much of a low as compared to the last few years. So we can sort of see from this data that the listings on a national level haven't been impacted too much to the trends that we're seeing in the Sydney and Melbourne. Jump down to Brisbane, and this is where the data, I suppose, given that we're based in Brisbane, is quite alarming. We've seen here now in 2010, Brisbane was sort of sitting in and around, let's call it 30,000 listings at any one point. And since the start of COVID, around the same time that we saw that interstate migration really coming into the Brisbane and Queensland as a state, we've seen the listing numbers drop quite dramatically. A huge impact seems to be down in these sort of over 180-day listings. We've sort of dropped right back there. And now we are pretty much at the lowest point we've ever been. Maybe you could say back in the start of 2022, we were sort of at a similar number, but now we're well below sort of the 20K mark. We're probably sitting there somewhere around 18,000. So that's a huge drop when you look at it from a historical point of view. And I think this data really shows the impact that the Brisbane property market is now having on our national trends. For Brisbane, and I did see when I looked into the data, Adelaide does have a similar sort of graph. So Brisbane and Adelaide have really started to put those trends on a national level. So our absorption rate, those days on market sort of show that our absorption rate here has also dropped off and is impacting the market. So we've got more competitive terms when things do come on the market. So that then made me look further into what's happening in the units in Brisbane here. So we've got Sydney, Melbourne, Brisbane and Adelaide. I've added Adelaide in as of May 2023. So we see that growth here back in overall dwellings at 1.4%. But when I look at units here in Brisbane, that's where we actually have had some growth. And historically, units here in Brisbane haven't done well. We're now seeing the median house price in Brisbane getting quite high. So we're seeing a lot of investors jump into the unit space, as well as first home buyers who want to get a foot in the door. So our yields are quite good in Brisbane, with units being the highest out of those 4 cities. And we're seeing overall the annual growth still sits in positive in comparison to a house where it has dropped annually. Over the last month, we've seen 1.1% growth in units, 1.5% in houses. So then I've also just put off Brisbane here, and we've actually seen the house listings have been what has dropped off versus the units. So the units seem to have sort of stayed quite well, but yeah, overall, the bigger impact is probably in the house listings rather than the units. Macroeconomic impacts. So there's a great podcast that I listened to recently that's come out from the Financial Review podcast. I believe it's called The Fin, and it explains why house prices have also increased at the same time as the interest rates. While the cost of money is getting more expensive, we would have thought that house prices would have been a little bit more impacted than they have. And that's a great podcast. I would, again, sort of flag that to you if you have time to listen to that. That, again, is on the national level, so it doesn't really reflect what's happening here in Brisbane. But, I think the combination of this data and that podcast will really give you some good insight into that. So cash rate, we've had the sharpest interest rate spike. Houses were expected to slow, however, they're not. So we've had the sharpest increase that we've seen on that. And we still sort of think, when will this kick in? When will we start to see this? I think while supply stays as low as it is, particularly in some markets where that seems more impacted, it's unlikely for that to have a huge impact on the market and the supply that we're seeing. We've also heard a little bit about the net overseas migration into Australia. So I did dive deeper into these stats as well. And, we're getting some quoted stat numbers from when you compare, say, back in COVID, when we actually went into negative, and now we're starting to see a huge influx into that. When I looked into the data further, I saw the breakdown of the temporary residents in Australia, and we did see that a lot of the numbers that are adding to this increase are people who are on a bridging visa. And so there is a little bit of data out there to support that, even though these numbers do seem quite drastic, the number of people here, most of them are on a bridging visa, and it seems that it's just an increased delay with approvals of their visas. But most of the people who have arrived, they do have accommodation and things already in place. So the speed of the arrivals has been much greater than the policymakers were envisaging. And we're now seeing a large number of students and working holidays arrived, but very few have left. So there's some sort of other factors out in the market at the moment that we do need to consider when we're reviewing, what's going to happen in the next few months with the market. Brisbane predictions. So each quarter, I love to reflect back. I feel like there's a lot of people out there who make assumptions and sort of predictions without sort of ever being held accountable. So I do think it's great to look back on what I said last quarter and see whether that's eventuated. So last quarter, I said that Brisbane and Australia has conflicting indicators at the moment. I would still agree with that. Probably, if anything, Brisbane's indicators are probably strong that it won't go down with our listings data sort of being so low. Brisbane is going to float in and around the 0% growth for the coming quarter. I would say that was a fair prediction. We've had it's in the last quarter, going back to that first sort of stat, we've gone up 1.8% in the last 3 months. 1.4% of that was in May. So I think, we really did sit around that 0%. Small risk is that if some buyers start to take action, it will escalate quickly. So back in the first quarter, back at the end of Feb, we were seeing a lot of people at open homes, but we weren't seeing many putting those contracts down and sort of moving forward. I think that there's still a number of buyers at open homes, and we've just started to see that they're more ready to buy and putting contracts down. So I said that there would be a small window last quarter of opportunity to take the lessons that we've learnt. And that was around, like, if it does start to escalate quickly, we know what happened in COVID, and we were able to sort of say, well, what were the first markets that people turned to? How did the market react when it did escalate quickly here in Brisbane? I don't think we've seen a huge escalation in the last quarter. And I said that units will remain competitive as a cheaper option to get into the market, but townhouses are worse. And I would say this definitely has been the case. So we are searching for a number of clients in and around the unit townhouse market, and it is much more competitive than the more prestige, and where we are starting to see more off markets and things come through. So my predictions for the upcoming quarter is that I have said listings will remain the biggest issue that we need to overcome in the market. There's a few reasons why I think the number of listings will become worse over the next few months, and that is that we are in the winter sales period. So historically, people hold in winter. And we are hearing that from agents. We're hearing quite alarming things from some of the agents in that they're not doing a lot of appraisals. So some of our agents that would normally sort of carry 8 to 12 listings at a time and down to sort of like 3 or 4. So the industry as a whole, both on the sales side and buyer's agent side, is feeling the drop in listings. We're also hearing that sellers can't find replacement options. So because people are looking to upgrade or downsize, they're not able to find what they want, and therefore they're holding their current house, and they don't want to sell until they find that replacement option that they can move into. The other reason I think the listings is getting increasingly worse is working with some developers. I'm starting to hear that they are worried about the initial costs. So now that the house prices have jumped over the last couple of years, when they go to buy the, I suppose, site that they're going to build on, that has gone up in value. The build costs have also gone up. And they're sort of not seeing, like, will the profit be there for the end price sale if they, dive down now into those costs and sort of say, or, it's sort of looking a little bit risky. So they're my sort of thoughts on listings are going to remain a big issue that we need to overcome. And here, I suppose we have worked different ways to source for our clients, and we're trying our best. And even some of that, some of those options that are coming to us, we're just a little cautious. And I've got that here, that we aren't sort of seeing, given that the stock is so low, that some of the sellers who do want to offload some inferior properties, we're really like having to weed through some of those. So, just because we're seeing listings doesn't mean that they're sort of things that we would recommend our clients buy. I think while listings are growing, so low, that we are going to see the growth in the house prices. So I've sort of said over the next quarter that I think we'll see between 1 to 1.5% growth per month, which is, not what we were seeing in the COVID months, but it's still a pretty good growth rate for Brisbane. And I also think now that buyers, it is becoming more competitive, and that we are going to consider the terms around the negotiation, not just the price. So with stock so low and buyers in high demand out there looking, I think we will go back to having fewer terms or more competitive terms when putting offers forward for our clients. So that is the end of my presentation. I will go back, which is great because that's half an hour. And I'll just put it out there now for anyone who would like to ask me any questions. Thank you for joining. I appreciate your time. And please feel free to reach out by email or through the website if you do have any questions in regards to this.